Let me get you started with this chart on the BTV library, because we can actually see how broader emerging markets are under pressure as opposed to the S&P 500. And if you see the level of discount versus U.S. stocks, you see those levels that we haven't seen in about 20 years or so. And with really that tightening move in advanced economies and capital outflows potentially from Asia, are there any other markets or economies that could be a little bit more resilient in this environment?
Well, I think if you look at EM across the whole spectrum of EM, the markets there are facing similar pressures. Basically, normalization of policy by the Fed, fears about inflation, and which it will impact growth outlook for the region in Asia, also in other EM markets there. And on top of that, investors are still quite concerned about Chinese regulatory tightening, especially on the tech sector, which I don't think is finished, although the worst may be behind us. So these short-term factors will keep pressure on Asian markets, especially the tech sector, until we see more benign forces come in, which probably will happen after the middle of next year. Until then, we are likely to see more pressure on Asian markets, which will keep these markets range-bounded with a downward bias.
So where do you go in the meantime then?
I guess you avoid those sectors that are being hit by policy divergence between the region and the US, and also avoid those sectors that are under regulatory scrutiny. Obviously, those would be the e-commerce and the tech sector there. There is a place in the short term for safe haven vehicles like high-grade bonds in China, policy bonds and CGBs and things like that. Look for the yield picked up across markets in the short term as a shelter before we see benign stock market forces come back.
When you take a look at opportunities that come from policy divergence as central banks begin to normalize, what jumps out at you as some of those strategies?
Well, I think if you go across the Pacific and go into the US, short term, I think there is still more downside for U.S. bonds because of the pricing in of rate hikes by the U.S., which is still not quite certain about the timing. The tapering is quite certain already. But on the other hand, because of the strong growth in the U.S. and also reopening of the U.S. economy and so on, and also the most recent news about Mr. Biden's $1 trillion infrastructure plan has gone through, that will be positive forces for propelling the U.S. stock market going higher. So I think long U.S. stocks, at least in the next half a year or so. And then for EM markets, as I mentioned earlier, there will be still short-term downward pressures. But then if you look beyond the short-term horizon, into next year, likely in the second half of next year, we'll see a reasonable recovery of Asian stocks, especially Chinese stocks in the tech sector, because of the further easing by the Chinese authorities will help stabilize Chinese economy, which in turn will help Asian growth outlook. And also the Chinese tightening campaign should fade by around middle of next year, which in turn will give the Chinese tech stocks a boost for recovery.
And riffing on the supply chain crisis has been a popular trade, particularly when it comes to the enthusiasm around semiconductor and chip stocks. Does that continue?
Well, the disruption is a wild card because the market actually expected the disruption to finish by now, but then it's still going on. The problem is that this COVID issue is still around us with new variants and emerging and also and things like that. So I think the transitional inflation environment, which is tied to the supply disruption story, may have been lengthened. But I think in the end, this disruption is still going back to normal. A lot depends on the COVID development, and assuming there's no more significant infections going forward in the next 6 months or so, and with new vaccines coming out helping cure the disease, the world should get back to normal within the next 6 months or so. So the supply disruption story should fade in the coming months, which will, bring back the normal life, and then, all these benign conditions for Asian stocks or emerging market stocks to recover will come.